Welcome back. You're still with us on Startup Street. Now, Indifi Technologies, an Indian startup that offers digital lending to small and medium businesses, has raised $35 million in a new funding round led by ICICI Venture. Existing investors, including British International Investment, OP Fin Fund, Global Impact Fund 1, Umidyar Network India, Flourish Ventures and CX Partners also participated in the all-equity Series E round for the eight-year-old startup. Joining us now to discuss the fund allocation plan and the firm's growth blueprint is Siddharth Mahanot, the co-founder and CEO of Indifi Technologies. Siddharth, thank you so much for joining us on Startup Street. Like I just said, you've raised $35 million. First off, tell us what you plan to do with these funds.
So primarily the fund, we are in the lending business. Primarily the fund will go towards business expansion. We also plan to deploy the funds towards product development, going into new segments, and largely towards other growth initiatives that we have around lending to these small businesses.
All right. You've also started offering instant loans and enabling working capital finance to D2C brands and software firms. So where are you seeing the most demand? Any new offerings in the pipeline? Can you outline those for us?
Yeah, so essentially we operate in about 5 or 6 segments, starting from lending to retailers, to e-commerce sellers, to people in hospitality business, food delivery businesses. Over the last couple of years, a couple of new initiatives we did was, doing automated loans at a very small end ticket size. So, now we offer as small as 30,000 rupee loans to, with almost like an instant approval. Somebody comes, puts in the data and gets an instant approval. So a large part of our business over the last couple of years, we've gone down to the smaller ticket sizes and making sure that we are using a lot of technology and data to enable small ticket size loans. So that's been an initiative which has been going on for the last about a year or so and has scaled up very well for us. We continue to want to focus on that. We've also launched our product offering for giving credit to D2C brands, and there we also take larger ticket exposure. Another initiative which is much more recent, which we started about 6 months back, and we continue to want to focus on that. Apart from that, we also want to focus on creating new products. So products for instant payment to vendors, etc., are something which are right now in the evolution phase, and we will soon announce the launch of some of those new products.
All right, so lots of exciting plans there. You've also crossed 1,500 crore rupees in assets under management and disbursed over 73,000 loans. So how do you plan to grow this further? Talk to us about the ticket size of your loans as well. You were just mentioning that you've increased them as well. Who are your clients? What are the NPAs like?
Yeah, so our clients are typically, as you said in the introduction, as micro and small businesses. So these could be people anywhere from, say, a 10 lakh to a 10 crore kind of a annual turnover, right? These, as I earlier outlined, these are people who could come from segments as retailers, so very small retail shops, the mom and pop shops, to more sophisticated businesses like D2C brands or sellers on e-commerce platforms. In terms of the number of loans, yes, we've disbursed about 75,000 loans, approximately 4,000 crores of loans in value, and spread across over 400 cities over the last 8 years. Our average, we offer loans from as small as, say, 30,000 rupees to 30 lakh rupees in our normal business. Average loan size happens to be in the 6 to 7 lakh rupee range. As a company, we also are very, very focused on creating an impact, on creating inclusion. So a large part of our loans go to businesses who've never borrowed before, or businesses which have a very small history of less than 2 years. So, average loan size remains in that range of, say, 6 to 7 lakhs. And we want to, make the business more granular. So over the last year, while our AUM grew by about 100%, the number of loans that we disbursed actually went up by 150%. So we are actually focusing on making sure that the impact is spread across a wider number of customers and not coming from larger ticket size loans.
Right. Also, over the last 12 months, you've grown, you claim to have grown 100% in value and about 150% in volumes of loans disbursed. So talk to us about where your revenues currently are at. What are the targets that you've set for yourself going forward for this year? And you're already profitable. So where will the next leg of growth come from?
Yeah, so, in terms of profit, we got to profitability in the last quarter of the previous financial year, and FY23 has been the first full year of profitability, and we will continue to be profitable from here on. In terms of disbursements or the top line, as you say, the monthly, now we will be in that, say, 175 crores of disbursement range, and we want to, make it 3x over the next couple of years. In terms of where the growth will come from, I think the MSME market in India is extremely large. We are still a very small player in that market. We operate in about 5 or 6 segments right now. We would want to double down on those segments and definitely try and figure out a few more segments where we would want to venture into.
All right. Now, the Reserve Bank of India has come out with a new FLDG framework. So, fintechs have raised concerns of the default cover for up to 5% of the loan portfolio under these guidelines. So, what's your view? Talk to us about what you make of this framework and its impact.
Yeah, so our view is that one, it was much needed to bring about clarity in the industry. There was a lot of gray area and a lot of noise around which way this will go from. So the regulator finally coming out with a notification helps the industry because now it gives ample clarity as to what can or cannot be done. In our view, I think FLDG of 5% is quite good. And on our own business, we were operating at FLDG which were below that, or a large part of our business actually gets done without FLDG. Right, so the fact that some of the entities fintech companies which may not have a regulated entity, it gives them a benefit in terms of going and tying up with other banks and NBFCs to kickstart their business. For companies like us, it gives them benefit to tie up with lenders which may have lower cost of capital than us and get into a symbiotic relationship. But our own belief is that 5% is a very reasonable outcome that has come from the Reserve Bank.
So, welcome move there from the RBI then. Before I let you go, Siddharth, any plans to list on the bourses? Do you have plans to go public? Is that something you all are looking at?
Not in the immediate future. I think we still want to focus on growth and creating impact for our customer segment. The current round of fundraise, gives us the confidence to, double down on what we've been doing, execute better, and, that's what the immediate goal is.
Right. So no immediate plans to list on the bourses. All right, Siddharth, thank you so much for joining us on the show. We're completely out of time, but we wish you all the best going forward.
For having me. Thank you. Thank you.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.